how do you beat the bank? So it is a bank holiday, and that's just going to be my next question to you all is, how do you beat the bank? So,
You know, supply chain lines are expected to improve. You know, the situation further down the line in terms of energy prices should improve.
I get my bank statement printed off, get the highlighter out like George has done, and gone, do I need that? I can't believe I spent money on that. And you know, and you start breaking it down and you think of ways you're saving. You know, Neil,
yeah, absolutely. So we sponsor the Sunshine Fund every year for the Great North Run. I think this is our 3rd or 4th year doing it.
Definitely like to do it again, but best of luck to you. How's trading going?
All right for me. I think
I think you're in an elite
I
wave.
think somebody's made an
I
error
think
there
you're with
somewhere.
Mo Farah.
I think I'm going to be... Mo Farah's going to be trying to run round us. I'll not get past, I'll get the elbows up. But everybody, and welcome to the 132nd episode of the Do More With Your Money podcast. Today we're going to talk, and this is a mouthful, beat the banks this bank holiday weekend. There you go, I got it first time. So it's a session that we're going to run through about 30 minutes or so and really just talk about some of the ways in which you can beat the banks, beat inflation, and probably talk around a number of other daft things as we go through. So I'm joined by some friends today as well as colleagues. I've got Esther McCausland,
Hello.
George Bell, and Neil Rocket Rayner. So
Morning.
we've got the A team out today. So how is everybody?
Good.
Very well, thanks, Greg.
Good.
Yeah, tip top.
Tip top.
It's a while since I've been on the podcast. I'm trying to remember what I said last time.
So
Must
you
have
don't
upset
say it
somebody.
again.
We had Graham doing his first ever podcast hosting job last week, so I'm trying to bring as much energy as he did. But
Yeah.
I'm going to struggle. There's not enough coffee in the world to get me as excitable as Graham was, but I thought he'd done a great job.
Last time we did the podcast, you went and it was Peter Bold, but we all dressed up, didn't we? It was for Halloween.
it's a
so
Halloween special.
yeah,
I thought
so
you
I
had the
didn't-
same costumes.
Yeah,
on.
Oh,
I didn't
yeah.
recognise the.
Neil looks exactly the same.
It's Freddy Krueger.
Freddy Krueger.
Thank you.
Correct. Well, let's just probably kick off with just a couple of these sort of statistics and numbers and, you know, all kinds. And inflation's almost like a buzzword at the moment. It's 10.1%. Who's going to just kick off with what inflation is? I know we've covered it on previous podcasts, but I've noticed in the comments we have quite a lot of first-time listeners as well. So, George, I'll look to you, mate.
Yeah, no problem. So inflation, it's in the main, the general increase in the cost of goods and services across the board. And it's a hot topic at the moment. It's one of the key factors which markets have really been focusing in on. It's going to be the key topic of a lot of the conversations in the US this week. So in the US, they've got the Fed's Economic Symposium, which is an event which they hold in Jackson Hole, which is in Wyoming. Essentially, it's central bankers, academics, it's those in government who meet up to discuss tools around economic policy. This time it's inflation, what they can do to manage and to control. And essentially, when the Fed last met, their conversation was that inflation was getting more under control. So the moves that they've been making to raise interest rates and so on have been having an effect which has been bringing inflation over that peak. Now the conversation's moved on a little bit. Data's came out which is sort of putting a bit of skepticism on that, and at this point in time it's going to be how are the Federal Reserve going to refresh their expectations. So a lot of focus on there this week. But since that data came out in the US that inflation was starting to roll off in certain places, markets have really celebrated that. But in the main it's a focus because it's an increase in cost of goods and services which hits every one of us here at home.
That's where I've seen the most impact, because from my previous house, so we rented, and it was £100 a month, and it was just fine. You managed it, and then now that we've got a house, and we were looking at the bills, to even get an energy supplier was tough, but then it was like triple the price. It was a bit of a scare mongering. I think, obviously, thankfully, I listen to the podcast and I know that it's not as bad as everybody makes out, so it was okay, but it was about triple the price from the previous supplier that we had.
And looking at inflation, here in the UK, 10.1%, right, that's 5 times what the Bank of England are targeting, but it's not expected to be a permanent feature forever. There is expected to be roll-off effects. You know, if supply chain lines are expected to improve, you know, the situation further down the line in terms of energy prices should improve. And it's about that journey along the way. It's about what central banks are going to do to manage that. It's what the government can do to support the consumer along the way. So when we're talking about inflation, we are anticipating inflation to moderate towards those target levels, which is really important. And, you know, if we think about the way our fund managers have been looking at this, some of our managers are naturally more cautious about inflation. Some of our managers are looking at things like that peak in the US, or what they perceive to be the peak in the US, and have actually started to buy back into stock markets. So they're actually putting the money, the cash which they'd held on the sidelines, back into work, recognise that this could be a positive for equity markets. And over the last 6 weeks, we've actually seen some very strong equity market returns, and that's washed through into the portfolios as well. But along the way, we will hear more reports, more updates around inflation, which will feed into how the market's thinking.
So the Bank of England base rate 1.75.
Yeah.
I looked at my bank account this morning over a cup of coffee, and the rate I'm getting is 0.25% on the money that I've got in the bank. And Neil mentioned, you know, looking around and things, is cash isn't always a bad thing. And I want to kind of bring that into the next bit we talk about. Cash isn't always a bad thing. It plays a part in, you know, the portfolios.
Absolutely, yeah.
And also cash when you're speaking to clients, Neil, is something that they've got to have readily available.
Yes.
So let's just have a look at that.
Yeah, I mean, it's very important. You always need cash in the bank. We always say choose an emergency fund, be it 3 or 6 times what your expenditure is. So what that basically is you look at your expenditure every month. You see, I have £2,000 going out my bank every month for all of my bills. Let's hold £6,000 on deposit, or let's hold £12,000 on deposit. So that's your emergency fund, and it's really important to hold an emergency fund. Why? Because you can get access to it straight away. So if you need to, you know, go abroad quickly, you need to fix your roof. We always use the roof or the boiler as an example. But you need you need to get your hands on that money, and it's really important that you keep that on reserve. But you know, under lockdown in the past 3 years, a lot of people have accumulated a lot of savings past an emergency fund, and people are looking at the rates, like yourself, who've got 0.25 in the bank, and you're looking at it and you're thinking, well, that's a rubbish return, really. Let's have a look around and see if I can get anything better.
And Esther, you've just moved house.
Yes.
So you obviously done that yourself.
Yes.
As in, you didn't necessarily need a full financial advisor. So what was your thinking in regards to, you know, you've got the deposit.
Yes.
Was that invested, or was that sitting as cash in a bank account?
So it was invested, and we really did hum and haw about whether to take the mortgage and do it as a asset, have the deposit as an asset, or put a bigger deposit down. So we really did deliberate over it. So we decided that we'll put a bigger chunk as a deposit, and then we can hold that, and then obviously pay the monthly mortgage off. But the rates were so different compared to what I've owned previously, and I noticed a massive difference from maybe like 5-10 years ago in the rates that we were getting. But it was just a case of shopping around, really, and just making sure that we got the best deal.
Luckily, you've got a good friend as a financial advisor across the table there. So.
Yes, Neil's very handy.
And George, I mentioned it, but obviously cash, we don't always talk as being a bad thing at True Potential, because you're looking at cash as part of the portfolios.
Yeah, absolutely. I mean, you know, in essence, we want the vast majority of our portfolio to be money at work, but also we want to manage the level of volatility that clients experience within their portfolios, and cash is not exposed to financial markets, and therefore the volatility is very low. So it's a tool in that respect. It's also a tool for us to hold on the sidelines and put to work incrementally. So the experience which we've had year to date, our managers have been holding more cash because it's been challenging for equities and for traditional bonds. So it's acted as a diversifier in that respect. And as markets or our managers have got more comfortable with the signals that markets are giving them, they can actually put that money to work. So they buy in those units in the same way we've discussed within the True Potential portfolios as a client. the managers within the fund are able to buy stocks, are able to
Yeah.
buy bonds at more favourable prices as well. So you've got that benefit, and that's what we're starting to incrementally see from our managers. They're being very careful, very selective in terms of what they're buying and where they're buying. But it's a slight change in the mood music for some of our managers, starting to see some improvement. But in the main, our portfolios have been more defensively positioned through the course of this year, which has been the right thing for investors. But we've got that cash on the sideline to go to work as well.
I would just say as well, just in relation to clients, cash is a very immediate term. So if we look at goals, we always talk about the medium to long term, maybe it's 5 years plus when you're investing, to keep your money up until that point, to see some, not just to see a return, but obviously, you know, in relation to your long term goals, which is retirement. Cash is very immediate. So you should always hold that just there and have no real long-term outlook for that investment, because you maybe need that and have to have it on reserve as part of your emergency fund.
Yeah. So normally on a podcast, I always feel like we've got a question and we talk around it. Let's talk about the question, because I know all of our listeners have dialed in today to know, how do you beat the bank? So it is a bank holiday, and that's just going to be my next question to you all is, how do you beat the bank? So we've talked about cash and what rates are out there, but for me, and I'll give you my very quick answer, for me it's, you know, Neil, you've mentioned it's long-term investing. If you've got money which is a rainy day fund, you know, your boiler fund, your emergency fund, yes, keep that somewhere but make it work. But for your pension, for your, you know, your long-term investments, they should be invested in the market. And I'll give you my personal example. In February, I opened up a new account with True Potential. It was a general investment account. Put some money into it, and I think as of last week, it just about broke even. Now, what I could have done is I could have lost my nerve in March, in April, in May, in June, and basically sold the cash. That would have been the worst thing I could have done. I would have crystallised my losses. Last week, it went back into positive territory, which, thank you, George, you know, the work you and the team have been doing. But I knew that wasn't a 7 or 8 month investment. I knew that was an 8-year, 10-year plus investment. So for me, it wasn't even holding my nerve. It was going back to the questions I was asked at the start when I was putting the money in. How long are you putting this in for? 10 years plus. So for me, beating the bank is not always just about where you're putting your money at the time. It's your mentality of once you've put it in, which is quite important. So for me that's my answer. Beating the bank is, once you've got it in, don't get cold feet. Let us run the money over a longer term, and then you will beat the banks. Don't crystallise your losses, don't.
Yeah, I think it's
sell
about
out.
separation as well of funds. So you have your emergency fund there that you're thinking, I'm not going to invest that because I might need that. This is what I've got free. And also as well, a lot of people think, you know, you should have a lump sum to invest. You've also got regular investing. You know, it's when you're talking about a summer health check, Greg, and you're talking about income and expenditure, and you think, well, I've got £1,500 free this month, and I generally have £1,500 free every month. Why don't I put some of that away through a regular investment? And as we've said on previous podcasts, when we're talking to clients who are maybe in their 50s, their 60s, their 70s, and they've got these large pensions, these large value pots or large ISAs, that's because they're probably been regular investing for 20, 30 years. So don't underestimate the power of that, because, you know, you might think, oh, well, you know, it's too late to start, or I'm too young to start. I want to spend my money on other stuff. But you don't have to invest great amounts. If you want to invest 30, 50 pounds a month, believe it or not, see how much you get in 10 years. When you come to buy your first house, or when you come to buy a car or anything like that. So regular savings is always recommended as well.
That's what I was going to say. Obviously, you talk about £1,500. That's a lot of money to people. But if you break it down and see what you have got disposable every month, and then save before you go spending, before you have your weekends, put it away. It does add up. It doesn't need to be £1,500. It couldn't just be your 50, 100, but like via impulse save. You can do it small amounts, but it does add up. So definitely. So
stay at home this bank holiday weekend. Don't spend any money.
That's my plan.
Stay in the house.
Don't spend £300. Spend £250.
Don't go out every day over the bank holiday. Just Saturday and Sunday.
I think you paint a bad image of Geordies here.
I think that applies to everyone across the UK, Neil. Everybody likes a bank holiday weekend, so we'll move on. We'll move on. We talked about the health check. I just want to dive into that a little bit further, because I think boringly, as I say, I do try and do this, you know, at least a couple of times a year, where I get my bank statement printed off, get the highlighter out like George has done, and gone, do I need that? I can't believe I spent money on that. And, you know, and you start breaking it down and you think of ways you're saving. You know, Neil, you're speaking with clients every day, and your team of financial advisors are speaking with clients every day. Is this something we talk to clients about?
We do this all the time with clients.
Yep.
So a client will call up and they'll say, I want to have a look at my goal, I want to change my goal, or we review those client circumstances yearly. And those clients might have a change in their circumstance. They might have got a new job. Their partner might have lost their job, so they want to increase or decrease their savings. But what that also includes is a financial health check where we go through everything with the client. We see if their circumstances have changed. Clients call us up quite regularly and say, I want to take a little bit more risk with my portfolio because my circumstances have changed. And a lot of these clients call up as well and set up regular contributions. So we do a health check pretty much with clients all the time. And clients find it very, very useful because they think, I actually didn't realise I was spending that much money per month when I actually look at my bank account. Because for me, it's just, and as we all know, the easiest way to spend money now is to tap it on a card. And when you look at, I looked at my bank account and the amount of money that I spend in Sainsbury's is just off the chart. £7 here, £31
I'd
here.
had you at Waitrose, not Sainsbury's. I mean, Sainsbury's isn't a bad supermarket.
Not that posh. But yeah, it all adds up. And when you do analyse it and do your health check, it's very worthwhile.
Absolutely.
What, in terms of, say, like an auto-enrolment contribution, because obviously, like, say, my generation, that's a big thing now. Like, when I first started working, that wasn't even on my agenda, but now it's very much, you pay your contribution, your company matches it, you have to, like, it might be the industry that I'm in, but that's high on my agenda now, where before it never has been.
Yeah.
Have you noticed that more with clients, that people are calling because they have to, because it's sort of forced?
Well, auto enrolments, obviously you have to opt out now, but you should be automatically enrolled into some sort of pension, be it workplace or not, above a certain amount of employees. So clients are not forced into going to a pension, but it's becoming more of a habit. And because it's becoming more of a habit, it's good for people, because the younger generation who probably weren't saving into a pension are now really encouraged to do so. And then if you look at the True Potential portfolio with the app, you can see and actually track your goal. And that £50 per month which you're getting put in from your employer or £25 from yourself, you can see that you know how much your regular contribution is. It's all building towards your goal, and with the app, it's easy to log in and view where you are.
Yeah. I think there is definitely a sort of cultural shift. You know, I played golf at the weekend and spent about half an hour talking to my friends about pensions, which it's busman's holiday, but it's not a conversation which I'd ever have expected to have with my friends. But you know, it's topical. It's they're all from different industries, but because you've got, you know, you're automatically enrolled in, you've got that awareness, and by being able to see it on the phone and so on, it just brings that attention in terms of, okay, what's this actually for? Yeah. Am I gonna actually get there with this?
I had the exact same thing yesterday, George, last night, getting the bathroom refitted, which has taken years to do. They're not the quickest, but they're very diligent. I hope they're not listening. They're very, very diligent, but it's like a tile a day going up. And the guy, so what do you do? And you think, here we go. I'll try and explain what I do, because so I work for a pension investment company. Oh, right, I'm going to bring some paperwork tomorrow. And you think, fine. So he's going to bring all his paperwork, and I'll sit down with him tonight and we'll have a look over it. But you're right, it was almost it sparked something in his mind as soon as I said working with pensions. That's almost on his list of things to do. So maybe he's got time to do his spring clean and maybe start looking at consolidating his pension. And ultimately, I think what his query is he doesn't know what pension he's got. He doesn't even know who it's with. He doesn't, and I think that's the opposite really, of people are starting to take control and whatever, but it can actually be difficult sometimes knowing what you've got. The average person has 7 or 8 jobs in their lifetime. You know, they may have picked up pensions here or there, and they may know the trustee's name but not the provider's name, and it can be quite difficult. And Neil, that's something we're doing at the moment as well, which is helping clients consolidate, understand what you've got, consolidate into one,
Yeah.
so you can better understand your financial position.
Yeah, we did myself and Peter did a little podcast on consolidation of pensions a couple of weeks ago. And it's really important because when you get to, maybe it's when you start thinking about how much money I've got in my pension when I'm in my 40s, or you're coming up to retirement, you're thinking, well, I used to work there 20 years ago and I used to work there 10 years ago, and I need to know how much I've got in total. So I need to know how much money I'm going to get on retirement. And it's when you've got pension pots with different providers or different companies, it's very difficult to get a picture in your head of how much that pot is on retirement. So yes, that's what we do. When we do a financial health check with clients, we'll say, well, I've got this, and it really does trigger things in people's head. They go, oh, well, I used to work here 10 years ago and I've got a pension there. I'm not sure how much is in it. So really having that financial review, but also more importantly, having a look at all those pensions that you've got, putting it in one place. What is it going to give you? It's going to give you an aggregate figure to think, well, I've got this much money on retirement and I'm going to get X amount of money per year from that, or per month. So it's really important to review.
Yeah.
And also just sort of look, we'll hear a lot about that 10.1 figure of inflation, but that's an inflation of a broad basket, a very specific basket of goods. And not everybody's buying every item in that basket. So it's important to look at that and look at your finances and think, well, actually, how much is the rise in prices actually impacting me personally as an individual? What are my expenses? How are they changing? And if you've got the luxury of time on your side, don't forget that those long-term goals are still there. You still want to retire. You still want to have, that breakaway in the years to come. You've still got these goals in mind. So focus on yourself and what you want to achieve, I would say.
Yeah, it's a very relevant point, because if we take the people that work here at True Potential, we've got people that just work over there. I live in Durham. I live over there. I live in Durham. So, it costs me a lot more in fuel per month to come to work, as opposed to somebody who just lives on the doorstep. Yeah. So it's all very relevant to that person.
You should cycle in more often, like Jamie does.
Yeah.
Well, I knew we'd get Jamie, and it took us 25 minutes, but we managed
fall off my bike.
Yeah, fall off your bike like Jamie would. But he wears a helmet to keep himself safe, which is and sorry everybody listening, that's a bit of a private joke against Jamie Sexton. So look at other podcasts, you'll see what we're joking about. So look, guys and girls, I think we've covered off how to beat the bank, which I think, in summary for me, would be: look at your investments, don't bury your head in the sand, get saving whatever and whenever you can. Look for better rates than what the banks offer. Consider the portfolios for longer term investments and 5 years plus for your pensions and for your ISAs. And I think most importantly, and it's probably what I'm going to do, I don't know about you, but I'm going to book a health check in with Neil Rain.
I know, that's what I was thinking.
Let the guys do all the work for us, because that's what they're there for. Neil, you and your team are there to help clients basically achieve their financial goals.
Yeah. And would you recommend that annually, like an annual health check, or is this something we should be doing?
Yeah,
more
always good to have
often?
one. Always good to have one annually.
Right.
I mean, the team are on hand to take calls anytime. So if you think I want to have one every 6 months, or I want to have one every 3 months, you can do that. The great thing is about working, obviously, with when you're with True Potential Investments, is you've got a lot of information on the app. So a lot of years ago, when you were a financial advisor, you used to have a financial advisor coming around your house every year. Used to give you a paper statement, and you used to go, "Oh, right, that's how much is in my pension. Do you want to put any more in? Do you want to do this? Do you want to do that?" Now, with iPhones or mobile phones, you've got a lot of information on that app. You can track your goal. You can see the shortfall. If you have a shortfall in your goal, you could impulse save that shortfall. So you've got a lot of tools at your disposal. But yeah, it's always good to have an annual review. And we've got an obligation to give clients an annual review anyway. So it's always good to have it at least every year.
And for what it's worth, my shortfall on my pension is £280,000 right now. So I'll not be impulse saving that as of yet. But it's there for me to work towards, and it's an aspirational target.
Yeah.
I log in and I don't get, I'm not downbeat by the fact there's a gap. I use it as a bit of a motivation to think, right, keep working, otherwise you'll be working till you're dead. That's what I've got to keep thinking. So
half that Sky bill.
Well, if I get rid of Sky, Neil, I'll hit me goal pretty quickly for sure. So before we wrap up, it's probably just worth bringing in everybody again, but we've got a bit of a special at the end of the podcast, which is the Great North Run coming up. I think I got an email yesterday saying it's 18 days away. It sounded quite close to me.
Yeah, definitely.
But Esther, tell
Yes.
us all first of all just what we're doing.
Okay.
And who we're doing it for as well.
Yeah, absolutely. So we sponsor the Sunshine Fund every year for the Great North Run. I think this is our 3rd or 4th year doing it. The Sunshine Fund is a local charity, but it works with children with special needs who just need a little bit of additional support, basically. So we work really closely with them. Obviously, we all know them, don't we? We know Siobhan from the Sunshine Fund. They come in very regularly, and it's just a great charity to get involved with. So every year we sponsor the Great North Run. So that means that 10 lucky true potential members of staff get to run it. So raise your hands.
Picked it random.
Yeah. Raise your hands if you're running it. George, your name wasn't. Yeah.
No, I'm very pleased to be going, but I'm at a colleague's wedding on the day, so I'm missing it this year. I've done it before, did it in 2017. It was a brilliant day.
Yeah.
So I would definitely like to do it again, but best of luck to you. How's training going?
All right for me. I think I've been probably pretty consistent, but I can always improve. I think I need to do more miles, I think, but I'm doing all right.
Do more with your miles.
Do more with your miles. Brilliant.
How are you finding it? Because we've been interviewing staff for just for staff webinar like content, and one of the questions is, who do you think is going to be the winner? And
Adam Anderson.
he's not running it for the Sunshine Fund, but your name's coming up quite often, and I'm like,
I'll happily finish it this year, Esther.
well, I think
I've got an outsider. After who I think is going to win it.
But you did quite a lot last year. So
Yes.
if you're a regular listener to the podcast, obviously you did the Run Gregg run. So you ran over 1,000 miles in 8 months.
Over 12 months.
Oh, was it? I'm being generous.
I've been a little bit generous. I've done a lot of miles last year, but I've done not a lot of miles this year. So
well, actually, on the last leg, when we all come out for the last leg with you, that was actually a Great North Run.
it was a half marathon at the end,
So,
on a lovely cold December morning.
yes.
So no, I think for me, I'm looking forward to the run. I'm looking forward to it finishing,
Yes.
and then putting my running shoes in the bin, and then maybe never
Retiring.
running again.
Yeah.
But I actually think the Great North Run is, the world's best half marathon.
Yeah.
I've done it a number of times, and regardless rain or shine, the fans are all out on the street handing you lager instead of water.
Yeah.
I think I got offered the last mile a lager and a sausage roll, which is just what you need to get you through that last mile.
Yeah.
I came to the bottom of the hill, and everybody told me when you hit the seafront, that's it. And I thought, brilliant. Sausage roll and a lager. I might have one. I didn't have one because I looked and realised I still had a mile to go.
Yeah,
which,
that's quite deceiving, that last bit, isn't it? But I love it because we've got about 15 staff running it. So we're all in different waves, but I think you passed me last year, and it is really nice when you see everybody in your bright yellow Sunshine Fund vests running past people, or running together, and you've got runners who are all ages, all abilities, who are running it. So when you feel like you're flagging and you see somebody who's like a little bit more obviously disadvantaged than you, it's really motivating. Yeah. Although you flew past me.
I think it's good as well about the best thing about the Great North Run is it's from a competitive point of view, you always do it. You want to probably aim for as close to 2 hours or something like that as possible. But I mean, it's just the taking part really. And the good thing about the Great North Run is when you're running round, everybody sort of shouts your name and says,
because you've got your name on your
and say, go on, keep it up, which is it does get an extra couple of miles out of you.
Definitely.
Whole atmosphere. But
We'll need plenty of shouting this year, won't we? So
definitely.
I passed Neil Lawn, who's one of our developers. He's
Yes.
also running it for the same cause. And how's the training going? It's going. It's not going well. It's just going. And he says, "Did you get your number through the post?" And what wave are you? I think it's 1B.
I think you're in an elite wave.
I think somebody's made an
I
error
think
there
you're with
somewhere.
Mo Farah.
I think I'm going to be... Mo Farah's going to be trying to run round us. I'll not get past, I'll get my elbows up. But I think somebody's made an administration mistake saying I'm going to run it about an hour.
Yeah.
So
I think it'll be
That'll
fine.
be
that
good.
will not happen.
It'll be good because Graham and Katie, who obviously work behind the scenes, they've been doing some work with all the runners to get some like social media content. So we're going to start putting on the social medias in the build up how everybody's training's going. And I don't know if you've done your video yet, but I totally made mine
I
up.
did mine in Tenerife. So
Did
there
you?
There you go.
I
One of
thought you
them.
had a lovely glow there, Neil.
Thank you.
Yeah.
Well, what I would ask for anybody listening, anybody, you know, whether you're watching or listening, is obviously we're running it for a good cause, which is a fantastic charity local to ourselves, but just do a brilliant job. So if you can, please do donate. That's always never nice to ask, but always, you know, the reason why we're doing it. Sadly, this is a charity that needs funding, and we will do our very best to fund it. So we gave the staff a target to raise.
So we got 5,000 last year, so I feel like we should really try to beat that this year. And I
10.
think we can.
10.
10,000. Okay, you've given
Neil's
me a
just said
target.
everyone's got loads of spare money in their bag,
Yes.
so we'll go around with the buckets
Yeah.
and get the staff to
Yes.
empty that out. So.
Yeah,
Definitely.
definitely.
Great. Well, thank you, George, Neil, and Esther. A brilliant podcast, and we did tell everyone go and beat up the banks. So, on that note, do have a fantastic bank holiday weekend. If you listen to this in advance, if you've already had it, I hope you haven't got a bad head like some people. Thank you very much for listening, and do remember to subscribe and like the video. Thank you.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.